SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back to Bitcoin, and we'll have a look at more or less Bitcoin, but an overall view of the market, because again, we've waited patiently through the weekend, which wasn't too bad, to be honest with you. It held its own relatively well, some nice moves from altcoins. So look, the same analysis still applies. We'll move on to Bitcoin in just a moment. The same analysis still applies. It's all based around the Dixie top and the Dixie descent. So I'm looking for Dixie, as I've said for the last, well, I suppose this is week 4 now. I said the Dixie has found its peak around here. As we got there, a few days later, it seemed relatively clear that the Dixie had peaked. FOMC meeting, found a nice spike, sold off, very, very bearish looking candle there, shooting star if you want to be technical about it. Next destination so far would appear to be the Bollinger Band Center on a weekly, where I expect to find a bounce around there. Not a bounce for a reversal, although that could happen, but just a bounce, just a bounce, and that's coming in this week, and it'll be here all week. 109.2, 109.3. But my expectation is that we break down even further from there over time to the 50 exponential. So all of that remains exactly the same. Nothing has changed in the last 4 weeks. So with that in mind, let's just have a think about Bitcoin, and then we'll go into the Forex market to back up the Dixie and think, you know, just to seal in that Dixie's demise. So start with the weekly. So the weekly is in no man's land. We're floating around that 20 weekly, so a bit of a pivotal area really. We are above the 10 exponential, which is good, and that sits around 20,480 or thereabouts. The 7 simple is sitting around just below 20,000, and then we've got our box of significance. So let's bring this down to a daily, then we'll see what it is that we're fighting. So we can see a trend form now, and we'll just extend this a little bit so we can see it a bit better. Sorry. Mondays are always a little bit slow for me to get these videos out because I take my 2-year-old to swimming lessons in the morning, and then we usually go to get something to eat and stuff. And then she has a little nap, which allows me to make these videos at this time. Normally, I try and get stuff done as early as possible, you know, sometimes even before I start the school run, but we'll see. Right, so that, regardless of all of that, the trend appears relatively easy to spot here. We can see it quite clearly. Take away everything, and we can just, there you go. It's relatively easy to see. We'll turn everything back on because I like it. And there's no buy signals as far as, you know, daily itchy clouds are concerned, nothing like that, which is fine because those things will come later, hopefully. But for the moment, it's basically trend analysis. And I said right from the beginning, this everything bounce 2.0 that we're going to get is based around the Dixie, and crypto will be an afterthought of what happens after that. So it's based around Forex, commodities and stocks should start to feel it, and then the last thing that will ever get a move will be crypto, and that's fine. That's fine. I don't mind crypto being an afterthought at this moment. And what this basically means is that crypto is still quite weak until it generates its own strong trends and pivotal areas on charts, because we're trading this almost as a proxy of the Dixie, which is a combination of currencies, which we'll look at, you know, later on in the video, if you have the time or the patience to look at those sort of things. That's how we managed to predict this move. It wasn't really much to do with Bitcoin's chart. It was way more to do with Forex pairs. And so just recognize that whatever crypto and Bitcoin is doing is not so much of an organic move, is almost a move that's derived from the dollar weakness. So just recognize that for a moment. So this can be still very choppy, and uptrends when they begin can be very choppy, just like downtrends when they first begin can be very choppy, because there's that indecisive nature of which way is it going to go. People are not quite convinced, the market is not quite convinced that this is going to have legs and continue up. So recognize that, yeah, we are looking for supports to hold. If you're super bullish, you try it on the 10 exponential, as it would appear that some people have tried to do today. The market has tried to buy that particular dip, although we went down a little lower than it. And also recognize that wicks are good. You know, wicks can, you know, be quite precise, like this last one here on the 21 exponential, which is backed up by a flat figure of 20,000. But it's all about the daily closures as well. So, but anyway, buying the dip on this one is my preference, and the dip would either be the 10 exponential sits around 20,660. We've already done that one today. The stronger dip, if we were to get there, would be the Bollinger Band center. Now, this doesn't have to happen today. This could happen at any point this week. And obviously, if that's the case, then these supports will be higher and higher and higher, provided we're above them. If we start to dip lower and close below your Bollinger Band center, so that's your 20 daily moving average, then things might start to change, because basically that would more or less seal in it would basically seal in a lower low, and we want to keep a series of highs, lows, higher highs and higher lows. So really we can afford to come down to the 20 daily here, the Bollinger Band center. We can afford that, and that would be the perfect place to try it. But if we did break down from there, then it doesn't mean that we can't continue on with an uptrend. Remember what I've said about crypto being particularly weak. Let me make sure everything's recording. I've this computer, it does seem to be working very well now, but I'm still not quite convinced that it is. So yeah, buying the dip around the 20 weekly. It's standard, simple stuff, really. And but the thing I want to reiterate is that it's a simple scenario with Bitcoin, is that this trend hopefully continues up, higher highs, higher lows, based on moving averages and Bollinger Band strategy. Momentum seems fine as well, but there are no buy signals on the higher term timeframes, and so those sort of things would take place with closures above 21,700, we'll call it, this week. So any closure above 21,600 or 700, we'll call it, closures on a daily would form a pump signal on a daily, and that's something that we could really focus on. So if you get that pump signal, it doesn't necessarily mean it goes straight up. It would be a daily. You could give it a couple of weeks to play out, and so the next buy the dip situation that took place after a closure above there would be a serious one that would probably take us up to the holy grail of the measured move that we've had for quite a little while now, of this descending triangle, which measures more or less. Oh no, I've not got it anymore. Again, my analysis is sort of been wiped quite a lot, as well as my computer had to wipe it. But yeah, there's a measured move on the last descending triangle here, this smaller one, and it measured up to around 26,600, and so that would be the holy grail of this current trend if it continues on. And so yeah, dips are to be bought as far as I can see. And again, all of this is based around Dixie and dollar weakness. We can see the Nasdaq on the pre-market is up almost 1%. Again, it's just a pre-market; it's very early, but it is still up, moving above this this horizontal area of significance. The Nasdaq again is moving similar to that of crypto. Really, I'd call it quite weak for what it is. Earnings season is knocking really strong companies down quite a lot, and again we should expect that to continue, but for the moment things are still getting bought up. Now this is where the real magic is. This is your euro, trying to make it back up to parity, which I think it's going to. This is an ascending triangle. This is a weekly 1, 2, 3, 4, 5. Still holding this uptrend of support. So with that in mind, parity is still going to act as a resistance, but I believe it to break. And if it's going to break, we could target areas like 104 for the euro. The pound did actually break down, and the pound is extremely turbulent at the moment, just as our government and politics is very turbulent at the moment. We don't have a clue what's going on from one week to the next, to be honest with you, and so how can the pound catch a bid? But for the moment, any moment or any time that we are above this horizontal, which is between 114 to 115, gives the opportunity to seriously rally back up to around 120, 124. But this is a dangerous one because of all the madness which is going on in the UK. It's just very difficult to gauge which way it's going. It wants to follow the same trajectory as the euro, and so I do favour further upside from it. And again, it was working fine until last week, and so it's all a bit weird, but I favour further upside. And the reason we're talking about all these forex pairs is because this is going to influence the Dixie. If these two keep going up, then the Dixie will help. It'll help the Dixie go down. And then the last one is the old the Japanese yen, USD Japanese yen. So I've got USD Japanese yen. So we're looking for shorts on this one. So we want this one to descend, and this will perform just like the Dixie. And again, looking at this on the daily, we've moved back up to retest that area of support stroke resistance. Rejection on it, Also, the 10 exponential is creeping down from it, so I expect this to move back down to at least 145.50, which is the Bollinger Band bottom, and probably continue down from there. This is a big one. So this is similar to the way that it's behaved in the past, and then obviously always gone back up. But we're looking for intervention now from the Bank of Japan, and it's only going to increase the downside on the Dixie. So this is why I'm so confident that the Dixie has peaked for the short term. You know, over a 2 to 6 week period is what I gave it to meet its destination. My destination is still this area, and so with that in mind, we've still got a fair bit of room to move down on this Dixie, which means that everything should go up, which is why I called it 4 weeks ago the Everything Bounce 2.0, because this is what these are the repercussions. You know, everything goes up as default, you know, because everything else is paired to a weaker dollar. Weaker dollar basically gives the impression of a stronger everything else. So that's an Everything Bounce 2.0 in my opinion. So it's all still working out very fine, and nothing has changed since I called it out 4 weeks ago. I think the problem most people are going to have is that, you know, lack of patience or whatever, that they, you know, or lack of belief or understanding. And that's going to play havoc with the psychology of trading this market. I've broken this down on a daily and a weekly, which are relatively long time frames as far as most people are concerned, that, you know, sitting around looking at a 15-minute chart or whatever. But I still expect everything to continue the way I said it was going to, even on the day of the FOMC where everything was going crazy and the Dixie was going back up again, and I had all these really popular traders on Twitter saying, oh, there you go, haha, the Dixie's going back up, you know, blah, blah, blah. I was like, no, this is just a reaction. It's just a reaction. This time round it is actually different, and even though I expect the Dixie to bounce eventually and maybe go back up to where we came from, for the moment, the Dixie's going down. There's nothing really is going to change it unless something somewhere fundamentally really drives the chart in a different direction. The markets are speaking louder than any of these central bankers can do, and we should just allow for that the market to carry us to where we want to be. This isn't going to last forever, but it's definitely going to last for a little while longer, so we can just sit back and chill and buy the dips, as far as I'm concerned. You do what you want. I'm not a financial advisor, clearly, but this is my interpretation of the market, and so far it's working out very well, and I expect it to continue to work out in this direction. Anyway, if you want to join the Telegram, it's free. If you want to join the Patreon, it's £7.50 a month. And I'm thinking maybe, because it's my birthday on Wednesday, maybe I'll see if I can do a special deal, maybe like a Patreon deal, maybe bring it down to £5 for a month. But we'll see. I don't know if Patreon lets me do all this mad stuff. Anyway, thanks for watching. Hope you have a nice day. Take it easy.